Hello traders, the title of the video is Technical Trader Reveals the Secrets of the Moving Average 14. I have on my chart here the moving average 14. Hold on a second, we want to make it a little bit thicker. Bear with me traders. So that's my moving average 14. Now you can all see it on my chart, alright? Now we want to talk about the secrets of the moving average 14. Do you use the moving average 14? Alright? Or do you want to use the moving average 14? The first secret about the moving average 14 is that professional traders love the moving average 14. You will notice also that most default setting for many technical indicators are set at 14. But now we don't want to talk about other technical indicators. We want to talk about the moving average 14. Why are we so obsessed with the moving average 14? All right. The first secret about the moving average 14 is that the moving average 14 is the leading indicator for the moving average 20. That's the first secret. So we are using the moving average 14 to go ahead or to predict, all right, or to have a better view of the moving average 20. So instead of using a moving average 20, which will be more lagging indicator, we prefer to use the moving average 14 to be ahead of the moving average 20. Now, so you may say to me, Joe, how come? All right, this is a very good question, because the next secret that I can share with you, if you do 70% of 20, you notice that the 70% of 20 is 14. So you do 70% of 20 on your smartphone, you notice that 70% of 20 is 14. This has something to do with the core value. So the third secret of the moving average 14 is that the moving average 14 represents the core value of the moving average 20, as we are talking about distribution. All right, do you understand? All right, so I don't know how to put it to you. We talk about distribution when we have something. All right, one example is when we have the Bollinger Band. All right, we have what we call a dispersion. Sometimes the price will go outside the Bollinger Band. That's what we call a dispersion of the price action. But the core price action will stay within the boundary of the Bollinger Band. So again, if we consider the moving average 20 as something that is solid, all right, and we discounted the dispersion, something that are wasted, all right, the core value of the moving average 20 is the moving average 14. So far, I have shared with you 4 secrets. The moving average 14 is used as the leading indicator for the moving average 20. We also know that 14 is 70% of 20, and the 13 is that the moving average 14 represents the core value of the moving average 20. And then you will say to me, George, do I care about all this useless information that you are sharing with me today? And I will say to you, stay with me. So how do we use it as technical traders? Why do we care about the moving average 14? All right. There are more to this because, in fact, instead of using the moving average 20, it's better to use the moving average 21. There are other reasons for that, and I will be recording another video when I will be talking about the secret of the moving average 21. So I'm saying to you, normally it's better for us to use the moving average 21 instead of 20. It doesn't mean that 20 is useless, but there is a good reason why it is better to use the moving average 21 instead of 20. This is also has something to do with the core value of another moving average. All right. So as a technical trader, what are we looking for? How do we trade the moving average 14? That is a leading indicator for the moving average 20. On any time frame, if the moving average 14 is declining, all right, and the price break below a key level, break below and retest a key level and find a resistance, that is a bearish trading setup on any time frame. So as long as the moving average 14 is declining, and as you can see here, there was one example here, there was this support level right there, and the price break below that support level and retest it, that is a bearish trading setup. As soon as the common center line here is kaput, we will implement, so you're on a monthly chart, you want to catch it at the early stage, you don't want to see a long candlestick bar, you can switch to the weekly chart or you can switch to the daily chart. Wait for the first candlestick bar on the daily chart to pierce through that common center line here, and then your trading setup is in place. So what I'm sharing with you, talking about the secret of the moving average 14 for us as technical traders. If the moving average 14 is declining and the price breaks below a key level and retests it, that is a bearish trading setup. And if the common center line is kaput, we implement a top-down trading method to trade it. Here it is, it went down, yes or no? Beautiful, yes or no? So this is one of the secrets of the moving average 14 on any time frame. On the other hand, if the moving average 14 is rising, see, it's rising, and the price breaks above, okay, a key level, you see here a key level like this, and retest it, we have, okay, so first time here, so it must be first time, not the second time. So you see, it's declining, and the first time it breaks below and retest is rising. Okay, let's look at another example here because the other one is so good. Here it is. So it's rising now, you see it's rising nicely. Now it breaks below that a key level here. Now it retests with this bearish candlestick bar. Now we implement a top-down trading method to take it to the next resistance level. Alright? Here, this candlestick bar, what was happening here, you can see the tail of this candlestick bar. After it breaks above this resistance level, the professional want to retest it, but there were too much buying activity here, and they couldn't retest it. So, if the moving average 14 is declining, and the price breaks below a key level and retests it, that's a bearish trading setup. On the other hand, if the moving average 14 is rising and the price breaks above a key resistance level and retests it, that's a bullish trading setup. In all cases, one must use a different time frame trading method or a top-down trading method. I have not yet finished. So for more advanced traders that understand candlestick bars, all right, if the moving average 14 is declining and we see this particular candlestick bar, you see, an inverted hammer that is bearish like this one here, or we see a bearish candlestick bar that is retesting the declining moving average 14. You see this one example here. So it is declining. Now we see a specific candlestick bar, a bearish candlestick bar that is also a bearish trading setup for more advanced traders that understand candlestick bar. After that candlestick bar is closed, we implement a top-down trading method. Though swing traders love that method very much, we can use it even for scalping and also for day trading on a 5-minute time frame. All right, on a 15-minute time frame, it's declining. You see like this. Then monitor the candlestick bar and come down nicely. If the moving average 14 is rising and the price retest it, here it couldn't because it went too far. It's going too fast. If it's too fast here, it deviate from it, so it's not retesting it. But the point I want to make, I can see one good example here. Yeah, there's one here. Moving average 14 is rising, and we see a bullish candlestick bar retesting that rising moving average 14. There was one here, we implement a top-down trading method to trade it. So, all right, top-down. So here, this one got a tail. So people were applying a top-down trading method here. It went up all the way up here before they sold it down. All right. So I don't want this video to be too long. All right. So the first thing we want to understand about the moving average 14 is a leading, okay, moving average, a leading technical indicator for the moving average 20. So we are using a moving average 14, all right, to predict what is likely to happen to the moving average 20, or to have a better view of the moving average 20. All right. So it's a leading technical indicator for the moving average 20. We also know that 14 equals 70% of 20. Therefore, the moving average 14 represents the core value of the moving average 20. All right. Practically speaking, when we are trading as a technical traders, if the moving average 14 is declining and the price break below a key level and retest it, that's okay, a bearish trading setup. On the other hand, if the moving average 14 is rising and the price breaks above a key level and retest it, we have a bullish trading setup. In both cases, we must use a different time frame trading method. On the other hand, Similarly, if the moving average 14 is rising and we see a bullish candlestick bar that is retesting the rising moving average 14, we have a bullish trading setup and we must use a top-down trading method. On the other hand, if the moving average 14 is declining and we see a bearish candlestick bar, see here we have a bullish inverted hammer here, a bullish inverted hammer retesting the decline in moving average 14, we have a bearish trading setup and we implement a top-down trading method. There was one here. Moving average 14 is declining. We have an inverted hammer, a bearish inverted hammer, inverted bearish hammer. Here we have inverted bullish hammer, retesting the declining moving average 14. Okay, common centralized couple, we implement a top-down trading method to the next key levels. All right. So this is about a technical trader reveal the secrets of the moving average 14. There are more that we can say about the moving average 14. So you may say to me, George, show me one example on the lower time frame. Sometimes professional, I'll go to the 5-minute time frame, will be selling. So what is happening? They will sell below the moving average 14 and they will buy above the moving average 14. So if the price you can see is above the moving average 14, they want to buy. If it is below it, but you need more practice to do that. And also, if you want to apply that strategy for scalping and also for day trading, you want to use it only for financial instruments that are running very, very fast, that are going very, very fast. Don't use that strategy, especially if you want to use it for scalping. Moving at 14 going down, you want to sell below, or moving at 14 is rising, you want to buy above. I'm saying to day trader and swing trader that want to apply that strategy, they must trade only financial instruments that are moving very, very fast. Right? Don't trade financial instruments that are not going anywhere because it will not work beautifully. All right, and also you can use it when there are major economy news, major economies release. Probably want to run fast. All right, those are the time when professional will trade in that faction. All right. So this will conclude our discussion today about technical trader reveal the secret of the moving average of 14. Moving average 14 is a leading indicator for moving average 20. 14 equals 70% of 20. Moving average 14 represents the core value of the moving average 20. Look for candlestick pattern or bar on the edge of the moving average 14 when it's rising or declining, and implement a top-down trading method. Look for break above, break below, retest, okay, and implement a top-down trading method at the time when the moving average 14 is rising or declining. All right. If you have any question or suggestion, put in the comment section. And in due course, I will be recording another video to answer your specific question. We are the GSTW24 traders talking about technical trader reveals the secret of the moving average 14. If you truly find this video useful, okay, feel free to give us the thumbs up. If you think that this is another useless recording, let us know by giving us the thumbs down. If you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. Happy trading to you all and speak to you soon.